All right, let's keep going. Second part of chapter 8, budgeting chapter. We're picking up with our direct labor budget. So we started off with how many units are we going to sell? How much money are we going to bring in? How many do we need to produce? How much material do we need to buy? When are we going to pay for the material? Now we're going to do labor, and in the project and in the notes, we're going to do a very basic explanation of labor. So we are not going to pay overtime or anything like that. So we're going to pretend like our employees are all part-time employees and that we don't pay anyone overtime. So everyone like works less than 40 hours, so we don't have to pay them overtime. So all of our employees make $10 an hour, and each unit we make takes 0.05 hours to make. So how many is that? So there's 60 minutes times 0.05. All right, it takes us 3 minutes to make a unit. I still don't know what we're making. All those pounds of sugar, who knows? So what we'll do is we need to know how many units we're going to produce, and each one takes 0.05 hour, and then we pay our people $10 an hour. So in April, I'm going to make 26,000 units. So we need to go figure out where we got that from. So you look through your other budgets. All the budgets are connected. So it looks like this is from the production budget. So we're going to make 26, 46, and 29. 26, 46, and 29. We pay, each one of our units needs 0.05 hours. And so 46,000 times 0.05 is 2,300 hours. And we pay our people $10 an hour. So looks like that's $23,000 in May, 29,000 times 0.05. How long does it take us to make our units in June? 1,450 hours at $10 an hour, $14,500 in labor. So that's how much we're going to spend in direct labor. I went ahead and did the quarter column for you. I'm just trying to save time in the notes, so I'm doing a little bit for you here and there. So in total, the number of units we're making is 101 at 5.05 per unit, means we need 5,550 hours at $10 an hour. We're going to spend a total of about $50,000 in labor costs. So I'm thinking about April again, because in April, if you remember, we're only bringing in 170. I'm just worried about April. We're only bringing in 170. We're going to spend 40,000 on material. We're going to spend another 13. So we've already spent 53 of our 170. I'm just thinking about it. So looking at April for our overhead budget, overhead is going to be based on variable overhead and fixed overhead. Variable overhead, our rate is $20 per direct labor hour. So every hour we spend on direct labor, we're going to basically give it $20 of overhead. So if we work 1,300 hours, which comes from up here, at $20 an hour, that's 26,000. Our fixed overhead is 50,500. So if you take 26,000 and 55, then we have 76,500. But of the 50,500, that includes 20,500 that is depreciation. So depreciation is not a cash flow because you don't write a check for depreciation. It's just equipment getting used up over time. So if we want cash paid for overhead, we would subtract out the depreciation, and we're only going to pay 56. But 56 is a lot. So we have a lot of rent and utilities and things like that for our factory, supervisor salaries and stuff. So we're spending a bunch of money in April. Remember, I said we'd already spent 53. Now we spent another 56 on overhead. So this 2,300 comes from up here, and then we have 1,450 for June times 20 is 29,000 plus 50,500 is 79,500 minus 2,500, which is our depreciation. So that gives me 59,000 for June. Double underline that. So 56, 76, and 59 should equal the total in that bottom right corner. 56, 76, and 59. 191. And 191 is also 50/50 times 20 plus 151.5 minus 61.5. 191. Okay, all good information. So the next budget isn't really a budget, but we're going to use it to do some stuff on our balance sheet. So what I want to know is what is the ending finished goods inventory? So the first thing I want to know is what does it take to make 1 unit? So 1 unit is 5 pounds of sugar at 40 cents a pound. I think that's $2. So let me check that. 5 times 0.4, 0.05 times 10. Remember, each unit takes me 3 minutes to make. We pay our people $10 an hour. So every unit takes me 50 cents of labor. And I have 0.05 at $50 an hour for overhead. So let's take a look at that $50 to see where that came from. That's $2.50, by the way. And so if I add up my total cost of 1 unit, it looks like it's $5. Now I remember from the beginning that I sell my units for $10 an hour, so I've got a nice markup. But this $50 an hour, where that comes from is our predetermined overhead rate. And our predetermined overhead rate is going to come back and haunt you all the time. So to come up with our predetermined overhead rate, there's a little asterisk next to it. It's total overhead divided by total direct labor hours. So total overhead and total direct labor hours are up here. This is the overhead budget. Here is total overhead. And total direct labor hours is 5,050. Okay, it's also right here because these are my direct labor hours. So if I take 500 divided by 50, you get $50 an hour, and that's our predetermined overhead rate. So all along, I always gave you guys the estimated overhead and the estimated driver. This is how that number actually comes about. This is how the estimates come about from the budgets we create. And the budgets we create start with the sales budget and then production and everything else we've done. So when we end our inventory at the end of June, I need to know what the dollar amount's going to be on my ending finished goods. So so we have all the assets on our ending balance sheet, like cash and accounts receivable and equipment, but inventory is one of them. And each one of our units is $5. And to find the number of units that I'm going to end with, I usually make the students go find it. So if we scroll around, what we're looking for is how many units are we going to have on hand on June 30? So we're looking for units. This is overhead and this is labor, and that's paying for material, and that is buying material. But here is that production budget. And what I want to know is how many units am I going to have on hand on June 30th? So on June 30th, I'm going to end with 5,000 units. So how many units I'll have on hand at the end of June. So we'll put 5,000 here. And each unit is $5. So that looks like $25,000 is going to be the value of my ending inventory on my balance sheet. And I'll need it later. So I'm just making a note about it. For the selling and admin budget, I did this one for you. And that's because it's very, very similar to the overhead budget. So what we got here, though, is units sold. This is not units produced. Units produced was 26, 46, and 29. But units sold, selling and admin expenses are based on the units sold. So 20, 50, 30, and the variable portion is 50 cents a unit. Maybe that's like a commission. So 50 cents a unit. And then the fixed is 70, but the 70 includes 10,000 of depreciation. So if we look at the April column, 20,000 at 50 cents is 10 plus 70 minus 10,000 that's depreciation because that's a non-cash activity. So total selling and admin expenses are 80, but cash paid for selling and admin expenses is only 70. All right, now we're ready to do the big one. The big one is the cash budget. The cash budget is the main budget on your project that you guys are going to struggle with. So when we look at our cash budget, the main one that's going to give you trouble is the cash budget because all of our other budgets roll into it. It'll be the first check figure you have. And so I will give you this little number right here. And everything you do has to roll into that. And so it's not the hardest budget to create, but it is the hardest budget to hit the check figure for on the project because you're going to try to figure out what was wrong the whole way through. So I went ahead and did April and May for you because I'm saving time as far as putting the project together, but I wanted you to do the quarter. So we're putting the notes together. So we're going to begin. This is the information that was given to us. We're beginning this quarter with $40,000. That's what we're going to start with in April. It says that we have a line of credit available through the bank, and we're allowed to borrow up to $75,000. So we are approved to borrow up to $75,000. All borrowings are going to occur at the beginning of the month, and all repayments are going to occur at the end of the quarter, as long as we're able to. So we will borrow in increments of 1,000. So if we need to borrow, we are not going to borrow $1,250. We'll borrow 1,000 or 2,000 or 3,000. All interest is going to be paid at the end of the quarter, and the interest rate is 16% a year. Now that's the APR. I always give you rates in the annual rate. So 16% is terrible. We can basically get that on a credit card, but who knows? So this is our line of credit at the bank. We can just basically cash into it anytime we need it. And we are going to want at least $30,000 on hand at the end of each month. If we don't have $30,000 to start the next month, we are going to borrow in increments of $1,000. Wait, what? Cash dividends of 51 are going to be paid in April, and all the months to pay a dividend. April, that was the month I've been worried about, right? So that's rough. And so, but if we always pay dividends in April, it's not like we can just not pay dividends and then the owners will be like, what's going on? We need to pull our money. So we're going to buy some equipment in May. Ooh, that's a lot. We're going to buy a lot of equipment in May, and we're also going to buy some in June. This equipment isn't going to be installed until after the second quarter is over, so we don't have to worry about depreciation on that. So let's look at the month of April. We are going to start with $40,000. We are going to bring in 170 in cash collections. That will come from the cash collection budget. So we have 210,000 available to us. So that 170, we got to go all the way back to cash collections. Here it is, 170. Okay. So that's where the 170 comes from. So we have $210,000 available to us. We are going to spend money on direct material. I remember seeing this earlier because remember I said it was 53 and then 56 in overhead. Selling and admin is 70. We're not buying any equipment in April because our equipment purchases are going to happen in May and June, but we are going to pay a dividend. So if we add those up, 40, 13, 56, 70, and 51, we are going to spend $230,000 in April. Now this is what we're planning on. Okay. This is our plan because these are all estimates. So we're going to bring in 210 and we're going to spend 230. So we are short $20,000. Our bank account, if we didn't borrow any, would be negative 20. So we are going to go to the bank, cash in on our line of credit at the beginning of April. We are going to borrow $50,000. Now the reason why we're borrowing 50 is because we want this balance to be 30. So 20 plus 50, negative 20 plus 50 will give us positive 30. And that's what we'll start our next month with. So in May, we'll start with 30. We're going to bring in 410. Remember, May is our good month. So we have 440 available. We're going to spend material, labor, overhead, selling and admin, equipment, and we're going to spend a total of 400. So we have $40,000 left over. So we do not need to borrow any in May because we needed at least 30. So we're good. So this 40 will become the beginning balance in June. So let's do that. I need to go figure out how much money I'm going to bring in the month of June. So I'm going to go all the way back to the beginning. And in June, it looks like I'm going to bring in 360. So that's how much money I'm going to bring in June. Okay, so I'm going to come down here and I'm going to bring in 360, which is good. I'm happy with that. I have 360 and 40. So I have 400,000 that I can spend. So what I'd like you to do now is I'd like you to hit pause and I want you to go see if you can find all of these numbers. So I want you to go look for direct material. So look at the 40 and the 72.3, and that will give you a hint on where to find it, but it would be on your expected disbursements for direct material, and then go find direct labor, overhead, selling and admin, and then equipment is just on this page. So equipment is 48.8 for June. We do not pay a dividend during June because we paid it in April. So that one will be 0. So go find these and then unpause me. Pause. All right. Are you back? Do you say things like this when you're talking to the students? No. Okay. So direct material, if we go find it, it came from this one, 40, 72.3, 72.7. Oh, if you guys got 72.7. For direct labor, it was 13 and 23 and 14.5. And then for overhead, it was 56, 76, and 59. And for selling and admin, it's just the previous page. It's 75. Now, I'm on both overhead and selling and admin. I picked up the bottom row because that's cash paid for selling and admin, because this is the cash budget. Later on, when I do my income statement, I'm going to need to know like the total expenses. So the 80, 95, and 85, because I need depreciation too. Okay, so let's check and see where we're at now. 72,700, 14,500, 59,000, 75,000, and 48,800, 270. Ooh, that's a good number. We have $400,000 available to us, and we only spent 270. So we have 130,000 left over, but that's a good thing because we got to pay back that 50,000. Remember what it said? All borrowings occur at the beginning of the month, and all repayments occur at the end of the quarter if available. So what we want to do is we want to repay the whole thing. So I'm going to repay the 50,000. So I'm going to do negative 50,000. And I also need to pay interest. So I need to figure out how much interest do I owe. And so the formula for interest is down here. I equals PRT. I equals, we borrowed 50,000 times the rate was 16%. And then we borrowed the money at the beginning of the month we needed it. So April, May, June, because we're repaying at the end, right? All borrowings occur at the beginning of the month. So the beginning of April, and repayments occur at the end of the quarter. April, May, June is 3/12. So what I'll do is I'll take 50,000 times 0.16 times 3 divided by 12. And it looks like my interest is $2,000. So in total, I'm going to pay $52,000 back to the bank on June 30th. So that's fine because I had 130,000 available to me, and I'm going to pay 52. So I think I'm staying above 30. 130 minus 52. I have $78,000. And that's going to be the number that I'm going to start my next quarter with. So when I do this for the next quarter, when I start and I do July, August, September, I'll start with 78. And so things will be good in July, hopefully, because hopefully in July, I'll bring in a bunch of money and I won't spend as much and I won't have to borrow it all and things are going to get better, but we'll see what happens. So to do the quarter column in total, again, you just assume you add across, but then I want to know what you started the quarter with for cash. And we started with 40,000 and then we brought in, and I would need to do 170, 410, and 360, 940. Giving me 980 available to me. And then I would need to add up all of these. I'm sorry, I wish I would have had that in there for you. This is mean. 40,000, 72,300, and 72,700. I added that one. 185. And I should remember these from the previous pages, but I don't. So 13 and 23 and 14.5, 50,500. 56 and 76 and 59, 191. 70, 85 and 75. 230. Oh, wait, didn't I buy some? Oh, look, I put this on the wrong row. Okay, I was like, wait, didn't I buy some equipment? That should have went here, and this should have been 0. And you probably did it right because you probably read it right, but it's fine. It still adds up. I'm okay. I was like, wait, didn't I buy some equipment? I did. Okay. So 143.7 and 48.8 is 192.5. And my total of my dividend was 51,000. Let's underline that. And then let's add up my total of money I spent for the whole quarter. 185, 55, 191, 230, 192, 500, and 51,000. 900,000. Let's double underline that. And so, okay, so 980 minus 900 is 80. So I have 80,000 left over. And then I borrowed 50, but then I repaid 50. And I repaid interest of 2. So the sum of this section, the 50s cancel out, and I've got negative 2,000. And then I had 80, I had to pay net for the whole time of 2, leaving me with 78,000. So 78,000, whatever I end the month with is what I also end the quarter with for June, right? So, all right, so that looks like a good place to pause. And then I'll do my last 2 on a separate video. So